What's going on, everybody? Chris here. So we monetized this push up into here, and then now we're starting to monetize above the weekly resistance into the other weekly resistance, a push into there. Um, it'll be interesting to see how the week closes on quad witching day. But right now we're in profit 22,000 bits, and with the target, let's see, I think it's this one. The target is obviously we got like 1.71 risk. I think it's because it's not accounting for the swap, and then reward of 76,311 um, bits, and that's roughly around like 1,600, I think. So what are we planning? We're planning. We're gonna obviously have timing solutions as our guide. So we have our target. We're using a naked pivot as the target, and then we're gonna, I guess, push 1/3 long. Let's see, that 450738. There it is. So if we get up to the weekly resistance, let's see. This is, I don't think that's weekly resistance. Weekly resistance would be, according to this right here. So we're gonna push 1/3 long to see if it's successful. If it reclaims and it has a H1 market structure break, we'll get out of it. Right now I have a trailing stop on the H1. If we put on the market structure break, it's okay. I don't know why this says the H4, but it's obviously the H1 over here. So we're gonna put on market structure break, a market reversal, and then we're gonna see just the one, and then we're gonna take out this one-click trading because we don't need it. There it is. So that's the H1 market structure break. So we're going to be following it. We're going to wait and see if we have a break. We're going to also put an ADR here. Why not? I kind of want to trade. Let's see, ADR. We want the indicator. There we go. And then there's the target. I want to put the weekly resistance in there. So this is like, it's the most clean version I can get. Let's see. Weekly is on the weekly. So we want this one, this top one. What's weird is like the price point in here is different from the price point in my trading view. Because like I think the other one was had the right number, I think, before I moved it. But whatever. Okay, so it says it's roughly going to go a little higher, and if it were to come back and break down, I mean, we wouldn't be losing a whole lot. From the 76,000 bits, it's already a lot of money. I mean, 40,000 bits yesterday. We'll go here yesterday. What was it? It looks like it was spread out. Let's see, on the week, 45,000 bits yesterday, and then roughly 76,000 today. That would be great. That would be, what is that? 115,000. Anyways, like it's a good chuck and change, in 2 days. But anyways, we're gonna this that line disappeared, so we're gonna put it, and I think that's where the weekly market structure break is. Like if we were to just, there it is, lines up perfectly. Weekly market structure break. So yeah, maybe like obviously I have a take profit there, and what I could do is I could wait for a 15-minute market structure break and let it hit the far target, and then have the 1/3, and then see what happens, like so, and then I'll just put the trailing stop. I'll put the stop loss there. So if it comes back, like at least I got the main deal. So let's go ahead and adjust the take profit and see what it does. Let's see, that's not the trailing stop. This is the trailing stop. Okay, so we want to have our biggest profit makers take profit early. And then first we want to see, we got 0.24 lots. So what is 1/3 of that? So I mean, if 9 is 3, 18 is 6, 24 is 12, or 9. Did I do that right? 9 times 3? That's 27. So 24. So roughly 8. So we're going to leave 8 left. And we're going to adjust the... Oh, there it is. The take profit. It's going to bump it up a little bit. For the 2/3. Some lag issues. What did it? Oh, the volatility, yeah, it's coming down. So maybe we won't, it might not even happen. Who knows? So it's going up little by little. It would be so clutch if like that's it. Like if that we can get that take profit. I'm gonna watch it like a hawk though. No trades until the end of the trading day, or at least until we reach that target. Okay. And if anything, that 1/3 will be credit for financing the short side. So we need, I think it was roughly 8 left to the long side. So we're already at 80, so that's cool. I think we're getting close. Maybe we'll hit up like 85,000 bits of profit. One, two, three, 4, 5, 6, 7, 8. Boom. And then just make sure the calculation is correct. 24 times 1/3, 8. Roughly 86,000 bit. And then we're going to take off the take profit of the 1/3. And that's going to be subject to trailing stop. We're going to try and push it long. So we're taking the stance that we're open to randomness, to a possibility of further upside. But we've already taken profit on majority of the position in case that that's wrong. And we're also open for a change in market structure, a delayed response instead of a proactive response, and into a change in market structure to build more confidence on the short side, which would also be financing for our shorts. And then once we start breaking down a market structure, we'll already have a big position. That's the idea. And if anything, it's just a wash. Okay, so that's it. So that brought it down to 64,000. Obviously, we're gonna take profit when the market structure breaks, and it'll probably be up around here. So we'll be closer to probably like 70, maybe 80,000 bits. So we'll see. It's not a big deal from 85 to 64. Like 64 is just as good. It's a really nice take profit in a day. Like that's 37% increase. That's a good day. So I mean, and for the reversal, we're aiming for even higher. We're looking to add even more to the like we're expecting a swing to the short side. So like we're expecting another version of this the very next week. Of just more profit, 30%, 40%, 40%, like just crazy amounts, like 100%, 150%. We're just kind of looking for those big gains, and I'm suspecting it's going to come at the short side. I already know that we're going to come back at the lows because we have a market imbalance on the H4 there. So this might be the reversal point here into Monday. So that's something I'm kind of suspecting. I have no idea if that's true. I'm just kind of doing a system where it's like partially open to being wrong, thus the 1/3 long, and then at least having confidence to take majority of my position of profit. So confident to trade it and take profit on most of the position, but open to being wrong 1/3, which will just either turn into a wash or it will be a really good short. So that's kind of it. Looking for a good trading day, looking for a reversal. I'm looking for extension. Let's see, close this. Looking for extension on this. Obviously, we have overbought on the RSI, and then on the trend efficiency, I think it's like Kaufman trend efficiency ratio. We want it to spike above if we can, to where it's I guess like an RSI overbought, and then we want a market structure break. Just because it's like a really good reversal, it means like the bulls are trapped, and like that the position will be safe, like from coming back to it. Like that, it's kind of just in essence, and that the trend will be squashed on the market structure break. But we want to see an overextension, just because then that liquidity that's purged is also our safety. That's kind of just how I see it. And the safety is less fake outs because we're out of the chop. And that's how I see that. We want less noise, and we're doing a mean reversion system. Lee Sampson, the guy who's a market structure trader, he says that the market is at 80% of the time mean reverts and 20% of the time trends. So like in the 52-week range, it makes sense. It's mean reverting. Like it's just ranging in the 52 weeks. And we're playing the range. Like if it reclaims the 0.382, boom, there it is. Fake out fib right there, 0.382. So and we're on the right side of the probability. We're on the 80% the chance that would be successful if we mean revert. And on timing solutions, it does give a concave look. So we have the probabilities I guess like the confluence at least, not necessarily the probabilities. I don't think they all add up into like a master probability, but I think the confluence gives me confidence that it's um, it's a decision worth risking or at least scaling into and tiptoeing into. But that's kind of just how I'm approaching it, and it looks like also that oh, I guess that resistance line is there. Um, Wanted more of, I guess, the weekly. The weekly, I think, is more true to the resistance. The saying the resistance would be here. It looks like it's right at the naked pivot, but for some reason, I just believe like it's gonna just touch. It's gonna tap that weekly resistance because it's the weekly breaker. I don't know. Something tells me like it's gotta tap that weekly breaker, and I have to watch it because it might not take profit because it's too perfect. So we're gonna have to just make sure at least it takes profit once it gets really close. Like I don't care if the goal is just not to miss it. I don't care if I get a little bit right before it. I just don't want to miss it getting really close and then just not taking profit. But fundamentals on the yield curve is the same. Move index is down. It'll be really interesting to see how the week closes with that. But the 2 and 10-year are up. It's getting really close to zero. So it's point. Yeah, it's in the negative. So once it gets, it's at 0.2. So once it starts getting below 0.2, obviously it's negative because of just how the formula of 2 minus 10 is working. If it would be positive, if we did 10 minus 2, it would be not negative 0.2, it would be just 0.2. But oil is up, so it does make me feel like I'm missing out. But we're just going to be patient. We're just going to put the trust in the timing solutions that it knows what it's doing. And even though we had a market structure break that I don't think it even retested, so we're expecting it to come back and retest. Maybe there's like some kind of market imbalance that I didn't see. Maybe on the H1. We'll just for kicks and giggles. Let's take a look. I mean, I got the H4 here. Turn it to the H1. All right, so I'm gonna turn to the H1 because it's definitely not on the H4. I don't know. Not there. Maybe. Uh-oh. There's one right there. Oh, there it is. It's right there. Kind of curious, like, is there an H4 one there too? No, but that H1 kind of gives me hope. It gives me a target. So let's go ahead and take a look. Yeah, it's like one of these. I'm thinking, dang, this one looks really good. 83. I would say this is kind of more in line, just what we want. We want it in that fib range of the 0.13 fake out. It might go a little below. Oh my gosh. I guess that's it. It's not even on the right candle though. There it is. Yep. Let's get the upper side up. I'll just take the whole candle. I mean, it makes more sense that way. Okay. And then we'll put a line. Boom. So this is like a hope and a prayer. We'll see. But we'll be, celebrating, singing birthday songs once it gets there. And another one, maybe. So sometimes it's weird with these that it's like the middle of these two. When there's two naked pivots next to each other, it's like sometimes the middle. Yeah, this is a naked one over here. So we're just gonna play the range and more like the market structure break. We're just gonna see it come down into there on oil, and then we're just gonna play a market structure break, like a 15 minute, or yeah, I think a 15 minute is enough. It's early enough, and then if it comes back at the lows, then so be it. Like, I mean, we got a tight enough range. The range is like what 83, 82.8 to 89. So it's like what 7. Okay, let's check out the H4. Maybe I missed something. Nope. And then that's a good spot. Looks like it's in the middle. 86. This looks like it's like a big support line. Um, I don't remember which one it is. Oh, it's the top of the left shoulder there. Interesting. So the top wick. So if we're doing the breaker, and this is the breaker, and this is the point of origin on the daily, let's go ahead and highlight the daily point of origin. I think it's this one, this retest. Yeah, it's this big black one. Right there. And then look at there. The line is almost right where support is. So maybe it's 84.741. You know, if it's a point of origin play, that would be kind of ridiculous. I mean, the fib got us close. Like, maybe we'll have to wait and see as it comes in. Like, I'll buy when it gets close, like in this zone, any kind of 15-minute market structure break to the upside on like a non-aggressive, then I'll start scaling in. But once it starts getting close to this line, I'm going to switch it to aggressive. And I want to get in to the long side and anywhere it touches near here. So that's like a really interesting kind of exercise. I didn't think I would need to do that, or that was there. But now that that's out of the way, we kind of got an idea. And, I got my system that I'm excited to do. And we'll see how it plays out. But it does look like the S&P 500 is either keying off the euro dollar. So euro dollar, euro USD. Let's see. Looks like it's down. So dollar strength. So it's weird. I don't know. It must be keying off of oil then. But and then most of the Dow is keying off oil. But from what I heard, the Nasdaq was up. So I'm not gonna pinpoint it. It's too hard. It does look like the Nasdaq is the one that's pumping. It might be because like the credit spreads are relaxing. We have to see the weekly close on those credit spreads, but in due time. But yeah, we got a target for oil, so really excited. Let me kind of measure that move to see just like how much benefit we would get. So 86 looks like it's near that spot we want, and then so we'll keep that in mind. So like around 86. So if we were to measure from this quarterly, put this on the magnifier, put this on oil. If we were to measure from 86, I think that was the level. All right, here's the low, or the shoulder. It's right here. It's around 85. So that's a banger, 64%. That's crazy. If I thought the S&P 500 move in the last couple of days is crazy, I mean, oil moves quick. So that would be, I guess, the next Bitcoin. I mean, I don't see any government spending yet, so I don't see Bitcoin pumping. But oil, I could see pumping pretty good, just because of the context. The for Bitcoin, the context is not there yet. We need to see government spending. But yeah, oil looks great for a nice pump, and then leave 1/3 to a random walk. And then if there's any breakdown in market structure, we just take profit. But I'm thinking maybe an H4 trail or or the daily. Like I would like to see maybe more of a daily. But these oil things are like random walks. Like so one thing that was like an interesting challenge is trying to figure out how to appropriately trade a parabolic move. And I think the best way is just taking that 1/3 and breaking it 1/3, 2/3, and then just having a fast and slow. So we could do like a H4 trail with a daily trail or a weekly trail. Like so we kind of just have to play it like that. So that 1/3 maybe we'll put it on the H4 trail, and then on the other that'll be the 2/3, and then 1/3 of that 1/3 will be on the daily trail 9 period 2.9 ATR. So and then now with it being Friday, we need to prepare for the short entries up here. So I wanted to kind of do a play on the dollar versus the euro. Oh, man, it's just there's too many things to trade. I did get my Meta computer. I'm going to be posting pictures of it. But so we got the weekly here. We're getting close to that zone. And then we need to have these. So I got some bots running already. I got 3 H1s. I got the H1 on the initial break, and then 2 H1s on the breakers, and then an H4 reversal EA, the initial reversal, I think. So the initial reversal. So I think I have enough already, and then I also have like my assistant, the trade assist. So like I'll scale in maybe on some buy stops on the pullbacks, or sell stops on the pullbacks. But other than that, I think I'm Gucci. I just need to allow enough RAM to take place, so then it will like execute, and then there won't be any freezes or errors. So that's kind of just what I'm expecting. Everything's set up for a reversal. We're just kind of waiting. Maybe I'll do a 15-minute initial reversal as the closer we get. So like that would be the one additional add-on. We can prepare it now. And then in effect, I'll have to like sacrifice a tab, just because I'm not like, oh, we could just use that 15-minute right there. But I think it would be wise to sacrifice a tab. So technically, we don't want to set up the bot or yet, but we can later. But for the efficiency of just the since we got 2 dailies, just for the efficiency of the computer, we're just going to get rid of a tab. And I think this daily, even though it looks messy, it has everything we need. So we're going to just get rid of this weekly, even though it's like the cleanest of it all, and it's just too big for what we need. And then I don't know, I'm kind of liking this view, and then we just add the weekly order block, and we just get rid of this one, because we don't really need all that. So we're just going to add a market reversal alert, and then just weekly, and then both. Boom. Looks like it's closing the market imbalance right now. So it's either this is resistance or we do a sweep. So we'll see. this could be like the deviation, and this order block holds, and this is resistance here. But I'm not going to trade, only if we get extended, and best of luck. I mean, everything's at break-even average with the H1 trailing stop. Let's reminds me, I want the break-even average. It's down here. Okay, so everything's at break-even average. I got the H1 trail on, and we're just gonna see how it plays out. See if it survives. If it survives, it'll reach our target. If not, we'll just be grateful that we have. We got the experience of this. We're at 27,000 bits profit, so that's pretty good. Considering, this morning it was like less than 12, like it was like 10, and it dipped down to 5. So within a short period of time, we've went from 5 to 27,000 bits, and then so that's roughly $1,000. I don't know, like Bitcoin's price has changed so much, but I just kind of have in my mind 20,000 is $1,000. Not for long, I'm expecting it to go down. But yep, expecting a pump into here, and then we'll see what happens. Maybe the range, the 52-week range, will kick in, and then we'll get underneath the Fibonacci fake out, and that's a stop hunt right there. So that's kind of what we're expecting. So thanks for watching. See you in the next video.